Well, hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter. And yes, already it is December 2nd, 2023. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, we finished the week and the month coming back from the decline, ending around November 2nd. And November was a great month, and we expect a neutral to slightly up month if this December is like most other years. Meanwhile, the Fed is still on inflation watch, which kind of puts a damper on things. But anyway, it's coming into the holiday season full blast, folks, so get ready for it. Weekly stock analysis video. Well, let's compare MasterCard more in depth than we did during the week with American Express. And one of these stocks has doubled the return of the other over the past 5 years. Why? Because one company has doubled the clean surplus return on equity than does its rival company. Think of your bank account. Which bank would you rather put your money in? Bank MasterCard or Bank American Express if one of them paid you double what the other bank does? Easy question, folks. Easy answer. And our ETF video, which ETFs are doing great? Which ones are acting like they're from another planet? And what's the difference between the market averages and the top stocks in our top 7 ETFs? A very big difference is the right answer. Okay, folks, let's get on with the market recap. And when we look at the volatility bands, the top one and the bottom one, and we see that they started closing in about, toward the end of last week, and now the market has flattened out. But then all of a sudden on Friday, this market, and this is the S&P 500, went up to the 4,600 level and backed off just a few points. And let's look at another chart and we can see it better. But we're looking at this this 20-day moving average. Is this market going to break through the 4,600 level, or does the Fed have it a little bit worried? And will seasonality cause it to say, who cares? Let's go above 4,600. Good question, but let's look at some other charts. Now, here's the industrials, and you can see the past 2 days, Thursday and Friday, it just rocked and rolled. I mean, this is some move, folks, over the past 2 days of the week. But we can look up here at this indicator, and this is a 14-day period, and we can see that we are overbought because we're above this line. And look what happened last time we were above that line. Yeah, we got a really, really big decline in here. And so we just have to wait and see. But the good part is that the volume, the gray lines, these vertical gray lines, represent the volume on the up days when the market closes up for the day. And we can see that Wednesday, Thursday, and Friday we had nice heavy volume to the upside. And this intermediate term indicator does have no indication of turning down. So the question is the Dow and the rest of the market going to catch up with the S&P? And why do I even ask that question? Well, let's look at the S&P 500, and we can see where it is touching where the top, where it failed recently, well, about 3-4 months ago in August, or the end of July, actually. The market went up there and totally failed and then started a big decline. Right now, it's up there, hit 4,600 on the nose, and then closed down a few points at 45.94. So is it going to break through? And we'll see, folks. And here's this volume again. And on the S&P 500, nice volume to the upside. But don't forget, it was the end of the month, beginning of a new month, and seasonality or monthly seasonality shows that that is a strong time in the market. Plus, we have the holidays out there, and that's another strong time in the market. So November kept up its reputation by being a very, very good month, and December is usually a so-so month. It just kind of holds its own if the past is any indication of the future, and sometimes it is, and sometimes it isn't. So this is going to be very interesting looking at this line here, folks. We just kind of love it. But what's giving us a little heartache here is that the short-term indicator is starting to turn down, and this market looks like it's rolling over. Big gap right in here. Yeah, we don't like that gap, and we have another one down here which we don't like. And down here, this indicator, boy, give it another down day or two, and we'll see this black line cross over this red line, and that would give us a sell signal. And what is not doing so well is the semiconductors. All of a sudden, they've taken a hiatus, and they are on the downside over the past month or so. So we're a little worried about the QQQs. Now remember what the QQQs are. It's the NASDAQ 100 top or largest stocks minus any financial stocks. So just the pretty much tech stocks, and it's one of our favorite ETFs, especially the top stocks in it, are up 80, almost just about 83% for the year to date. That's pretty amazing, folks, while the QQQs are up about 40%. So our top stocks are more than doubling the QQQs, which are more than doubling the S&P 500. And there you have it, folks. It deserves a rest, doesn't it? So we'll see what happens. We have support right where we are right now. We have a little support in here if we bring this line across there, and then we're worried about this gap right here. And portfolio protection, yep, we have December puts, and this is about $135,000 portfolio. December 410 puts, January and February 410 puts on the SPYs. So these are the SPYs right here. The SPYs are 1/10 of the SPX, which is the S&P 500. So again, about $135,000 portfolio. If you're hedged all the time, then these are the hedges that you have. And we'll probably be rolling over this December put into March, just because we worry about January and February, the beginning of a new year. And the Fed did not give any indication that it's going to stop raising rates. It didn't say it is going to raise rates. It just says it's watching closely. And the Fed Chief Powell was emphatic about don't get your hopes up about any rate reductions coming. So the market is a little worried. But boy, oh boy, the Dow sure closed up nicely on Friday, didn't it? So, folks, we're looking at our technical signals over here, and everything is near the top. What has turned down short term is the QQQs, or the short-term RSI, Relative Strength Index, on the QQQs turned down, and therefore the intermediate is turning down. That black line has to cross over to the downside, so that's why we're saying it's turning down. And we just put hedges on the XLK, the QQQs, and the XSD. If you're hedging, if you're timing your hedges, if you're not, and you're always hedged, you're doing just fine. Those hedges are always on. But we put those hedges on because are these three ETFs going to go much further while the market is kind of topping in here? And it doesn't matter, because we have a nice run in all of these, very, very nice. And don't forget this, the QQQs being hedged is up almost 40%. So you can't beat that for going into the last month of the year. So we're not too worried about this. This is a good strategy. If you're hedge timing, we don't have sell signals yet. So keep that in mind. And folks, we had a wonderful month. We had a great week ending that month, and we're going into December and the more holidays, and everybody is happy, but a lot of people are using their credit cards to spend a lot of money. So that we have to worry about. So folks, get out this weekend, go for a walk. I've gotten some calls from friends up north. I'm talking about way north, and yeah, they have snow already. So I was talking to somebody from Minnesota, and well, I think they have snow all year round up there. Anyway, go out, take a good walk, forget about the market. You're doing good. Everybody's doing pretty good this year, coming off of a not so good 2022. Clear your mind, be with your loved ones, watch television, do whatever you want, because guess what? The market will be open on Monday. All right, folks, you have a good weekend. We'll see you on Monday, and see you next week with our daily market letter.